Hi, we're back to do exercise 610, still from page 281. This will be like the second homework problem in your homework for week 2. All right, so we have a company that has two segments, east and west, and they give us some information, and we're going to take a look at this company, and we're going to do several things. All right, we're going to compute the break-even point company-wide for east, for west, so just like what we did in the lecture. A new segmented based on the break-even. So instead of this actual sales, right, this is their sales. It's going to let me calculate a contribution margin ratio, which will let me calculate a break-even. So, calculate the break-evens, prepare a new segment that's with the zero profit, right, a break-even income statement. And then, do I think we should allocate our common fixed expenses? All right, so let's see here. I wrote down the equations, or I guess they called this a formula in the book. Anyway, if that's fine. So to get a break even, right, you take your traceable fixed expenses and your common fixed expenses and divide them by your contribution margin ratio. And because this is the overall whole company, you use the overall numbers. Right? So the first thing to get is the contribution margin ratio, I guess. So 225 divided by 900,000, right, is equal to 0.25. Yep, 25%. So that's equal to 0.25. So our traceable fixed, and this is for the company, so traceable is 141, and our commons are 59, and that's over 0.25. So that ends up being equal to 800,000, right? 200,000 divided by 0.25 is 800,000. So that's my break even. Right there. For all of it, right? So that's for based on total company. So what about east? So we do the same thing, right? So the contribution margin is going to be 120,000 divided by 600,000, right? So that's 0.2, right? I guess I'll write it out here. Contribution margin equals 120,000 divided by 600,000, so the contribution margin equals 0.2 or 20%, however you'd like to call it. All right, and the traceable is 50,000, and there's no common, right? Because this is a segment, so you go break even is equal to traceable divided by 0.2, right? So is equal to 50,000. 50,000 divided by my 0.2, and that's equal to $250,000. Right? Okay, so there's my break even for East region. West region, we got to do our contribution margin. 105. Divided by 300. And that's 35%. And then our traceable fixed are 91. So 91,000 divided by 0.35 is equal to 260. All right, so this is my break even. This is my break even, right? So I got my 3 break evens, right? All right, so I'm going to do this, right? I'm going to do this, but to where net operating income, to where the product line segment margin is 0, right? So what I'm going for is for these guys to be 0. Sorry. Okay, I guess I don't need that. All right. So I know that my sales, right? I've already calculated this, right? So I know that for East, it's It's 250. Right, and for West, it's 260. All right, so 250 plus 260 is equal to 510, right? Variable expenses. So if 0.2 is my contribution margin, 20%, then that means that my variable expenses are 80%, right? So if sales are 250, right? Because these have to add up, right? So if this ends up being 0, then I happen to know that my variable expenses are gonna end up being 80% of 250,000, right? So that's 200,000. And I just know that because, well, that's how that works, right? I mean, of your segment margin, it's composed of 2 things, your fixed expenses and your variable expenses, right? If 20% of your fixed expenses is your fixed expenses, then 80% has to be your variable. That's just how that works, because we know we're going for 0, right? So, and same thing with West. If 0.35 is equal to my fixed, in other words, fixed expenses are 35% of my sales, then 65% of my sales has to be variable at 0, right? So, which is what we're at, right? So 65% of 260,000 is 169, right? Okay, so then that makes my contribution margin here. Oh, I'm sorry, I didn't carry this across. 369. And so then that makes my contribution here 50, and my contribution here 91. And so you add those up, and my contribution margin is 141. And so my traceable fixed costs is the difference, right? Because this is a break even, so we know that we're going to end up down here at 0, right? So whatever gets us to 0, right? So 91,000, 50,000, 141,000, right? So there we are at that. So there's our new break even. Now we still over here on the consolidated side, we still have our common traceable fixed costs, which is 59,000. And so now we're going to have an operating loss of 59,000 because we don't have anything covering our commons. All right, so that's how you do that. So, well, if we're having a loss, should we allocate that common over to these guys? Well, the answer is no. And if you remember from the lecture, so number 5, that's the last question. Do you think we should allocate our common fixed expenses? Well, you just can't do that. If they're not traceable, you can't allocate them. And we had a good example in the lecture of with the bar and the restaurant. So that's how you work that homework problem. That's the last one out of this chapter. The rest of the homework for week 2 is from chapter 8.